So we'll start with the stock of the day, which is REA Group, in keeping with reporting season, and shareholders will be receiving a record fully franked final dividend of 1.38%, up 35% from last year. That takes the total dividend payments for the year to $2.48 fully franked, a more than 30% gain on the previous year. FY25 net profit rose 23%, revenue is up 15%. And REA's Indian market is growing. Revenue there jumped 125% to $129 million. In Australia, outgoing Group CEO Wielandt says that buyer activity increased over the period, while the first interest rate cuts in 4 years have accelerated inquiries at REA. Further growth is expected in FY26, with expectations of further rate cuts supportive of buyer demand and selling conditions. REA will appoint a new CEO come September. Andrew Wielandt, let's get your view on REA Group. Look, the CEO, and lack thereof, once Owen Wilson leaves so far, we don't have that announcement yet. It's not really proving to be an overhang on the stock, at least today.
It's not Endeavour-esque, if I can use that analogy, albeit REA has a chair and a CFO, unlike EDV. Look, I've liked realestate.com for a while. I think we started buying it at about $70 or $80, so $255 is great. We love businesses with strong return on equity. It's got a 30% return on equity. It's got a 32% profit margin. The company met expectations, unsurprisingly didn't give guidance, but Aussies love their property, Nadine. Mm-hmm. And as long as Aussies love their property, then we love the banks, because the banks lend them the money to buy their property. So we're pretty relaxed with REA. I mean, having said that, though, the PE is pretty demanding at 50 times. So the relaxation is only whilst those earnings continue. If those earnings start abating or the property market starts doing silly things. In fact, if the property market does silly things, thinking out loud, that's actually a positive for them, because people will spend more money with REA trying to promote their property for sale. So you actually probably don't want a property market going sideways. If you have a property market going up or down, REA is going to make money. Falling interest rates is a positive for property. So I like it. It's a buy. It's a buy.
Henry.
Yeah.
You were on team take out REA from the fantasy portfolio. What gives?
I was, and I've been wrong. Yes, I was on team take out REA, and I'm happy to admit that I've been wrong in that one. It has been going kind of nowhere for some time, but this result was a good result, and I guess it shows the power of the brand, it shows the power of the platform, and it shows the dominance as well. The domain guys, they're in a state of flux to some extent. They've got a big new brother coming in to take over the company, big US brother. And that, I guess, opens up competition to REA, but they do seem to be kind of head and shoulders above them, and have that pricing power. And the dividend, I think, we're up 7% and a bit today on REA. The dividend primarily, I think, is what's driving that. That certainly, it's always good to reward shareholders. And of course, the biggest shareholder there is Rupert Murdoch. Mm-hmm. So well done, Rupert. You certainly weren't listening to me. So yes, I mean, it's a good result. It shows their pricing power. The dividend is good. I would still temper my enthusiasm a little bit, because there is this big brother coming. We have got CoStar coming from the US. That may affect them. And, we still have that price inquiry into them. And the real estate agents and buyers, or rather sellers, they can only put so much money into marketing. And, REA has got some pretty steep prices. And they talked about the price rises, and that's been driving the profits. So I would be a hold here. It's hard to hold something you've already sold. But as they say...
For those that are in it, you should remain.
Those that are in it and didn't take any notice of me, well done. I'd keep holding.
There you go. That's REA Group, the stock of the day.